Hi, I'm Mark Walker. I'm the editorial director here at the FinTech Times, and we're here at Seamless today. We've got Sander joining us today for an interview. Sander, if you could perhaps give us a quick introduction and of who you are and who you represent today.
Of course. So my name is Sander. I'm Dutch. I'm the general manager for Adyen in the Middle East, and I'm 12 and a half years with the company.
Interesting. So where I wanted to really start was a little bit of what you just alluded to there, being Dutch. I know you started your career within the company in the Netherlands, and then you moved into South America, and now you're in the Middle East. So without going through sort of a 15-year, 20-year history, what sort of started you off, and if you could tell us about when you first started in the Netherlands and what the sort of industry and the landscape was like at that point?
Okay. A lot has changed, of course, over those years, and the entry points for me in Latin America and here were obviously very different. Also from a company point of view, right? And when I started with the company, we were a startup essentially, trying to change the world of payments. Then when we started operation in Latin America, and when I joined, we essentially had no name in the market yet, right? So we are the unknown, trying to basically build an infrastructure around what we've built as a company. Now here, opening 2 years ago, we post-IPO, we have a name, and also we have a lot of existing customers that are active here as well. So for us, that the journey here in that sense, I would say, is almost a little bit easier than it used to be in markets where we really have to fight our way into the market as an unknown player. So that's different. I also see a lot of similarities, right? You see that merchants then and now are looking for better payment solutions. You have international companies that appreciate working with one partner in multiple countries. So that was the case in Latin America, that was the case now here. That's also for colleagues that are opening in other markets, just as Japan or Australia. You see the initial group of customers that show interest, that go live with us, to be global customers, that know our platform, that already have an integration, that know it from a back office point of view. So that scales quite quickly. Then what is typically the second wave of customers is the local ones that hear about you, that see our terminals in stores, that are curious about it, that question us about it. And that is typically not different between countries. What is different between countries is, of course, payment behavior, where this is a market that is very much card-based, very much driven by real-time payments. Latin America is still very offline. So there's still payment solutions in the market where after you buy something online, you still have to go to an ATM to actually do the transaction. People like to pay once it's being delivered at your doorstep in cash. So there's still a lot of differences between societies.
Quite a bit of difference on it. Yeah. And I guess, obviously, as you alluded to, when you entered the LATAM market, that was quite a number of years ago. And so at that point, the whole payments industry was different as well, and to it is now.
True.
Out of interest, why LATAM at that time, and why was the sort of decision made to have a go at that market or to enter that market?
It's actually our first real office outside of Europe at the time, outside of Amsterdam. Reason was we like to go where our merchants go, and that hasn't changed over time. So at that time we contracted with a few fast-growing international customers. Groupon at that time was one, and they opened in many markets, and they gave us a call and said, hey, we opened that market, can you give us the local payment methods? And that got us into Brazil at the time, but obviously also looked at the market opportunity. Brazil was you had one bank for Visa, one bank for MasterCard. Central bank basically killed that. And it allows us and other companies to certainly enter and be disruptive, start to offer those kind of services. So it was a combination of global customers opening with us, or we opening actually with them in new markets, as well as a regulatory environment certainly changing in our favor.
Okay, that's really interesting. It's kind of interesting to see some of the triggers that are doing that. And so the trigger for looking at the Middle East, was that similarly based around a client coming here, or was that something that you spent more time investigating?
A big group of customers, yeah. So you see that the brands you see here, if you walk around the mall, those brands exist everywhere in the world. So they've obviously been asking us to open multiple markets. there's only so many markets you can do at the same time, and it was just time to open up in the Middle East 2 years ago. So that was one drive. Second is that it's quite a relatively easy market to enter, very friendly from a regulatory point of view. That helps. So the barriers that we see in some other markets around the world to enter, they were not here, so that definitely helped. But we're mainly driven by customer demand. Yeah.
Okay, makes a lot of sense. You alluded to a point there, which I wanted to sort of circle back onto, was how easy it is to launch here. And obviously the UAE is pretty welcoming and easy to set up business here. Have you decided to use this as your base for sort of the Middle East area and sort of do some prototyping and make sure it works here and then looking in other areas of the Middle East?
For now, yes, but we typically would use the same approach to open in other markets as we used here, right? So there needs to be merchant demand, and basically the foundation needs to be there to open. Yeah. But yeah, for now this is our regional hub.
I think it was once said, I think by Dubai Tourist Board, is that the tourist destination for shopping is here. So I guess that kind of plays quite nicely into your hands with a merchant.
Completely, yeah.
So thinking a little bit about, obviously, without going into too much about what's happened over the last couple of years, we all know the pandemic and everything else. We're seeing in Europe and in the US a little bit of a downturn in the economic performance and merchants struggling a little bit more and lower payments. But that doesn't seem to be happening in the UAE quite as much. Is that something that you're aware of, that you can monitor, and why do you think that is?
Not yet, at least, yes. We see the same thing. I think the investment that this country, this region, has been doing the last couple of years in general to create infrastructure and to create an attractive environment for shoppers to spend their holiday, that obviously helps, right? I think in general you see a lot of news around layoffs with tech startups, but that doesn't necessarily immediately relate to consumers spending less, right? And yeah, so far for us the impact has been fairly, I mean, almost zero. Yeah.
Yeah, it's kind of interesting thing here as well. We've spoken a lot with others today about loyalty and loyalty programs, yeah, and them being quite inherently linked together to payments. Is that something that you are aware of, and how do you sort of approach that loyalty play in combination with payments?
Yeah, and that's very much has a cultural aspect as well, right? So I think in Western Europe, in some countries, loyalty systems are not that much embedded into society. Here it is, discounts, people looking for discounts more than in other regions. What obviously helps is, of course, discounts and loyalty system will have to be funded, right? So relatively higher interchange rates here than, for example, in Europe definitely help with banks being able to provide any kind of environment for loyalty system. That does help. I do in general see loyalty systems, of course, in Europe and North America and other regions, in terms of you have an app, you can scan and you have a loyalty system, but the kind of loyalty systems that you have here with very steep discounts and all kind of benefits, that's very much present here, yeah.
Yeah, it's really interesting. We were talking with the managing director for Enoch, obviously convenience stores, famous, and the fact that they're actually able now to release almost verging on a super app because of the loyalty people have to the brand and to filling up in that place. So I think, as you say, there's definitely an inbuilt culture of loyalty here, which I guess is a good thing, because once your merchants are using you as a payment solution, they're happy to stay loyal to you as well, I guess.
Yes, and I think merchants can actually think a little bit more about this, because am I going to gas station 1 or gas station 2? And what drives me to go to that gas station? Am I going to, I don't know, pharmacy 1, pharmacy 2? Anything where you have the kind of competition, I think those merchants should really think about how to create loyalty. And am I driving a few minutes more to go to the store where I have my loyalty membership? Yeah.
That's interesting. So I know you're speaking here at Seamless tomorrow about the startup scale-up journey. Really interested to get your opinion on, because we've seen from a lot of the editorials and conversations we've had previously that the startup to scale-up journey here seems to be quite quick. Yeah. And I wondered if you had any sort of insights into why you think that might be.
Partially, I think it's because of lack of legacy in the market. If you start your business now, you have a lot more tooling available than you had 10 years ago or 5 years ago. So if you look at the rapid digital journey and the digitalization of merchants here, they can really use tools that are much better now than they were years ago, more scalable. There are people now in the market that have experience in scaling businesses. I think it's very much related to that as well.
Yeah, it's very much in the European market. We've had to go from checks to cards to contactless to mobile, whereas the journey here seems to be straight from almost cash to mobile.
And it's not only in payments. We see that across the entire landscape of startups. So there is the friendly environment for startups and government bodies, semi-government bodies stimulating, providing help in finding the right people and everything. I think that's paying off.
Absolutely. So for my final question, I wanted you to get your crystal ball out and maybe look into the future a little bit. Next 3-5 years, what do you think payments is going to be doing here in the Middle Eastern region, maybe outside of the UAE as well? And what do you think is going to be the key driving force or the key opportunity?
It's probably very much in line with what we see globally. We see more initiatives around marketplaces, more initiatives around wallets. We obviously see more initiatives around crypto. So of course here where the UAE is definitely a hub for crypto in many different facets, that's obviously something that's going to develop. But we see in general around the world things like embedded finance, merchants offering financial products. We see merchants offering the wallet that they initially had themselves, offering it to merchants. You have Careem Pay. It wouldn't surprise me if merchants will be able to offer Careem Pay and similar kind of products to the market. We see in general a lot of scale in platforms. Platforms being suppliers certainly offering a pay solution. So I don't know, you have a point of sale solution, a cash register, that then also comes with the payment terminal. And companies like Adyen will be able to scale as much as that cash register then scales. That is something we see globally. So we are, as a company, investing very much in our platform product. And you see it here as well, because it's very much offering convenience for merchants.
Yeah. Absolutely. Well, thank you very much for your time. It's been an absolute pleasure talking to you. Thank you for joining us here at Seamless TV, powered by the FinTech Times.
Thanks for the opportunity.